We just think that this is going to become a core part of stablecoin money movement, that people are just going to want the money to be their own. Let's say I'm building a neobank and I'm sitting on billions of dollars of assets and I'm doing that on stablecoins. Why would I not want all the economics from that?
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Aptos is the no-compromise infrastructure for global financial markets. Fast, reliable, and 100 times more cost-efficient than other blockchains. See for yourself why Aptos is the chain of choice for institutions, users, and developers alike at the Aptos Experience, October 15th and 16th in Brooklyn. Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more. I'm here with Zach Abrams, co-founder and CEO of Bridge. Welcome, Zach.
Hey, Laura, excited to be here.
Yeah, excited to have you. So Bridge was acquired last year by Stripe, which at the time was the largest crypto acquisition. It's since been eclipsed, but we don't have to go into that.
Didn't last long.
Yeah, I mean, after the election, just everybody was like, getting their horses, ready for the race. All right, so since then, Stripe has announced a bunch of things, like its blockchain Tempo. There's been a lot of eyeballs on their next move in crypto, and today, Bridge is announcing a new platform called Open Issuance. So tell me about it.
Yeah, we're very excited. We actually, the original idea for Bridge was that we thought that everyone was going to want their own stablecoin. It turned out back in 2022, the market wasn't quite ready for it, and we needed more regulatory clarity. But we're extremely excited. Open Issuance is a platform through which any business, whether it's a bank or a marketplace or a fintech, can create their own stablecoin. And we are really excited about this because the market itself, we think that, folks are going to want to control their dollar, and they're going to want to be able to program those dollars, to work uniquely well for the platforms that they're building. Before Open Issuance, you kind of had two big issuers, or even today you have these two big issuers that dominate the stablecoin market. 85% of all stablecoins outstanding come from those two companies. But they're very specific in how they run those companies. They're focused on AUM, and they control what blockchains that you can issue onto. They control the mint and burn fees that happen. And as a result, a bunch of use cases for stablecoins just aren't possible or aren't economically viable. And so we think this is super important for growing the stablecoin ecosystem. And we think it's super important so that, all different types of platforms that want to come and take advantage of stablecoins can do so. So we're very excited about it.
Yeah, so I understand the problem that you laid out there, but then, if I think about a world with many stablecoins, then it to me sounds like the fragmentation issue that people talk about in DeFi a lot. So describe like what this world will look like, once this is kind of more widely used. Like, what is it that it'll be, one way for the businesses themselves, and then everyday users won't know kind of this is happening? Or just talk a little bit about like how this world will look.
Yeah, and I'll go into that, but maybe before talking about that question, I'll talk like more specifically about some of the problems it solves, and then the sort of flip that question on like what it would look like if there were only two issuers. And so one of the first use cases for Bridge was cross-border payments, and we had, this company Zulu. They were one of our first customers. They were moving money between the U.S. or between Colombia and the U.S. And so they would take, Colombian pesos, convert them into stablecoins, send those stablecoin to Bridge, and then we would convert those back into dollars. That flow of funds is burning stablecoins. That is like the way issuers think of that. And because their businesses are focused on accumulating as much AUM as possible and making interest off of those payments, that is a flow that is not economically interesting to them. And so, they charge burn fees to get out of those stablecoins. Well, those burn fees now have gotten to such a point where the cost of moving cross-border payments through stablecoin rails at times is more expensive than fiat. And as a result, stablecoins are going to be unlikely to solve the cross-border payment problem unless there are issuers or folks who want to issue stablecoins that don't care as much about AUM. They're using them for payments use cases to save costs in other places through the system. And so these are the types of problems where you have two folks, a very specific business model. They've done amazing things for this stablecoin space, but the stablecoin space will only be 1/10 or 1/100th the size that it needs to be. Another example is like, let's say you're building a bank and you want to pass on rewards to your customers. That's not really possible with current stablecoin issuers.
And wait, but just explain why that is. That's you're talking about because the treasuries are held by Circle and Tether. So okay, got it.
Exactly, and their businesses are driven by earning taking that yield. That's their revenue. So if they give that revenue to someone else, then there's no business. and so they're not economically aligned with a lot of the neobanks who want to build competitive products on stablecoins. And so we just view stablecoin issuance as this very important gap in the market to enable a bunch of different use cases for stablecoins that maybe some folks just don't want to enable. Their business models are not aligned with them solving those specific problems. And then to come back to flipping on the question on its head, the other thing that we believe very deeply is that stablecoins are going to be huge. There's going to be many trillions of dollars of stablecoins, and it is while it can be hard to envision a situation where there are tons and tons and tons of different stablecoins, it's also really hard to envision a situation where there's only two. And you have trillions of dollars of stablecoins managed by two companies, and everybody is like building and issuing and moving money on chain and all this stuff. And it's just two companies that are managing all the treasuries. Like the entirety of the world's economic system would kind of topple over by this oligopoly.
Well,
the world will
but actually explain
Yes.
that, because I think what we have traditionally seen in history is that when it comes to business, there are a few dominant players in each sector. So why is it that you don't think that will happen here?
I think that there are some markets where there are you end up in like monopolistic situations. But then there are other markets where the market just wants alternatives. It will not allow one company to win the entirety of the market. And like payment processing, which is the business that Stripe is in, is a great example. There's Stripe and there's Adyen, but there's also WorldPay and Checkout and so on. The market wants, multiple processors. That is like to de-risk their business. Some processors focus on like different aspects, different type processing for different types of companies, because the market is just so big. And we think the stablecoin market is going to be very similar to that. The systemic risk that would happen if you just had two issuers and they were investing in all the treasuries would be too great. The market will want alternatives, and will want to de-risk.
Okay, but actually, so just to understand one thing, so I understand like from the business's perspective why they would do this, but like from the user side, is the user going to be using so many different stablecoin? Like that's the part where I'm like, I don't think that's going to happen.
Yeah, that's a great question, and there's two answers to that question. So first, we think that all these platforms will have their own dollar that they control and that they benefit from, so that they could program it uniquely for their platform, and they can control what blockchains it goes on to. Like if they build their own L2, it will be they can ensure that it's available on that L2 instantly, that they get the economic benefits from, and they could pass those back to their users And we are building an interoperability network that will enable folks to move those stablecoins between any of these platforms one for one and permissionlessly. So if you're using wallet A and you have a stablecoin there and you send it to wallet B, it will seamlessly convert into wallet B's stablecoin, where they then accrue the yield and so on. And all of this will happen without the user knowing. That's one answer. The second thing is that we believe that stablecoins will just become core infrastructure. And over time, this like branding of stablecoins will recede into the background. And a lot of these applications will just show that you have digital dollars. And you will not care who the issuer of those dollars are. You just have your money in Revolut, or you have your money in Dollar App, or you have your money in Wise, or you have your money in Remitly. And as you send it, these dollars change shape for yield attribution and control and so on.
And like, I imagine there is a cost to all that swapping. So how does that get paid?
So
Or
through the bridge, great question. So through the bridge APIs, we convert everything one for one. So, $1 is sent and $1 is delivered into the wallet. We abstract away the gas and any fees that might come from our service. The interoperability network that we're building will not have any bridge fees, and will have the ability to easily abstract away the gas that folks might pay, so that you can ensure that dollars are delivered one for one. Like a great example is, like, you don't want, let's say you're sending money between, Coinbase wallet and Phantom or something, and you send $1, you don't want, 0.999999999 to arrive. And so we've our APIs and our system abstracts that away.
okay, got it. Yeah, that's like a cost you're willing to bear, because in order to grow the business, like, you can make your money elsewhere. Right.
Yeah, and to your point, I do think that like USDC and USDT will remain very popular branded assets that will accrue meaningful amounts of liquidity in like DeFi and trading and this sort of thing. Like, I think that is an area where stablecoins have very material network effects, and it helps to aggregate around one party to have better liquidity, so you can place deeper trades and so on. And that's like a very important benefit that they bring to the ecosystem. And as a result, that's going to become more and more and more important over time.
Okay. So this is, I don't know how you would want to count it, but it's clearly one of the first products that you have been launching since the Stripe acquisition. So why was it that was like something that you decided to focus on kind of early on? Like, is this something you're hearing from a lot of businesses? Or I'd just be curious, like, why you chose to focus here.
Yeah, I've spent like my whole career in fintech, and one of the things I really like about fintech is that it's very financially rational. And like an example that that easily comes to mind is like Robinhood. Robinhood won not because it's like some genius invention, but because they had free trading and everyone else cost $5. And for me, issuing your own stablecoin was similar. It was like, let's say I'm building a neobank and I'm sitting on billions of dollars of assets, and I'm doing that on stablecoins. Why would I not want all the economics from that? Why would I like outsource the management of those treasuries, not have my assets, segregated in some capacity, because, that presents higher risk to have it, all pooled in one place, and why would I, if I become totally dependent on it, then all of a sudden in year 2 or year 3, if I want to scale and do cross-border payments or some other use case that necessitates, burning or something, surprise fees come in and so on. Like, you don't want to be building Zynga on, Facebook, and all of a sudden they like change your interests and goodbye business. So it just made financial sense to me that folks would want this. And it was hard for me to envision that stablecoins would scale without this infrastructure, because it fills a very important gap for folks who will want to build core payments or fintech or bank applications on top of stablecoins. And At first, it was like that was it because at the time, we really didn't have folks who wanted it because the perceived risk of issuing a stablecoin was really high because this was back in 2022 after Terra Luna and after FTX. Um, and then we've seen over the last 6 months as we've had regulatory clarity that there has been a ton of interest in building with this platform. And, we saw that with native markets and USDH. We saw that with MetaMask. We've seen that with Dakota. We've seen that with Phantom, and we think we'll see that with every major platform that they will want to control their dollar.
Yeah, you know what is so interesting? Back when the Genius Act was passed, I was kind of outraged about that clause that the issuers couldn't pass off the interest. But now I'm suddenly realizing that that sort of hobbles them competitively, which is kind of, I don't know how I didn't realize that before. But in a way, like what you're describing is so fascinating to me because it's almost like your individual money market account that you just have in your own wallet or something like that. And but it acts like kind of liquid cash. So that's fascinating.
Exactly. I mean, it really is like a stable coin really is a better form of a dollar. Or a better transactional asset because today with the dollar, you can either save it, by putting it in a savings account, in which case it's harder to transact with and so on, or you can spend it, you put it in a checking account, and in which case you get like zero interest and so on. And a stable coin, you get both. You get it's like natively yield bearing, and it's very transactional. You can use it for payments, and you can issue cards on top of it, and so on. Another reason why it makes financial sense, like we thought that these things would become very important, but it's taken a little bit of time.
Yeah, no, I love it. One other thing that I wanted to ask about was just the kind of like security bit, because in a way, that's sort of what Circle and Tether are offering, right? It's like they're kind of managing this reserve and they're making sure it's fully backed and all this stuff. So how have you solved that problem for this product?
Yeah, I mean, this is like in many ways that is the product. The product is managing reserves, is ensuring liquidity, and is ensuring security. And this is something we've been building like really since day one of the company. Is like we actually ended up issuing our very first stablecoin probably 2.5 years ago. Just the business has really started to scale, and we've had to rebuild and retool the platform, which is what this announcement is about because of all of that scale. But under the hood, all of the assets are managed with core banks. BlackRock is the primary partner we use to manage the treasuries, and we have a bunch of other banks that we're bringing online as the platform scales. And then on the actual stablecoin issuance side, every single all of the smart at this point we've issued dozens of stablecoins. All of the we have like a standard smart contract that's been audited umpteen times. And then any additional time, any edits end up getting audited again and again and again. And this is ultimately the core of what we do is we have to ensure that that there are never more, tokenized dollars outstanding than there are actual dollars and treasuries under the hood. And that's ultimately that's success for us.
And actually, I just realized one other thing. Are there any security issues from the side of the customer who is creating their own stablecoin? I just think about, all these companies, they have these multi-sigs and stuff like that. So is there anything just internally that would be best practices to protect, their company stablecoin?
There's actually a real benefit to it's very beneficial to have your own stablecoin. So one of our early customers who is a neobank, they issued a stablecoin. They were they're one of our first and one of our biggest to scale with stablecoin issuance. Pretty early on, they actually had one of their customers that lost the keys to their multi-sig wallet. And because we had issued the stablecoin and it was their stablecoin, they could elect to remotely burn the stablecoin and recover the customer's funds, which is not something that would have been possible if they were building on top of, USDC or USDT. And so, that was a process where we had to work together to do it. You can't just like remotely, they couldn't just remotely burn on their own. But there are these benefits that come, and you could kind of think of it as like added security for folks who were building stablecoin based applications to ensure that, or to give more protections to their customers in case, something happens on the wallet side or they can't recover their keys or whatever else.
Okay. Yeah. I'm sure that would give like peace of mind to people. Like becoming your own bank is like appealing. And then when you really think about the details, sometimes it's like, wait a second.
Yeah. I mean, I worked at Coinbase for, a while. And one of the things we would frequently say internally was that Coinbase's like killer feature was password reset.
Pretty much.
Yeah, exactly.
So I did want to ask you also, because it has been a while since you were last on the show. And at the time, you said that you had a few hundred customers, I think like 300 or something. And we were talking about some of them were like gigantic companies, some were really tiny. And I just wondered, like, since the Stripe acquisition, how has business changed for you? Like how, and also with the passage of the Genius Act, like I'm sure that you're at this like very exciting moment in time in stablecoins. So I'd love to hear kind of like what it's like, especially like considering the Stripe acquisition.
Yeah, I mean, after the acquisition, we very viscerally felt a shift along the adoption curve. Before the acquisition, it was like a bunch of folks who had on their own had gone along the journey and decided that stablecoins were going to be super helpful to them, and most of them were small teams, developers outside of the U.S. It was like the earliest of the early adopters, in Argentina or Mexico or Europe or wherever else. And then after the acquisition, it just like immediately shifted. And we were talking to, large fintechs. We were talking to treasury teams for enormous, e-commerce companies. We were talking to banks. And so the last year, it's really felt like we've gone through like 5 years of like, the adoption curve all at once. And this is now like manifesting in the customers that we're supporting. It's manifesting in like, the other day we announced that we were launching with Remitly, and we announced we're launching with Ramp. There's a bunch of, now banks are like super keen on exploring the stablecoin space. We're doing more and more work with the networks because we want, because stablecoin settlement we think is going to be really important. All of these bits of infrastructure that, and use cases that we thought were going to happen are really starting to come together.
All right. So in a moment, we're going to talk a little bit more about the relationship between Stripe and Bridge, et cetera, et cetera. But first, a quick word from the sponsors to make the show possible. Over 3.4 billion transactions processed without disruption. More than $1 billion in stablecoins circulating. Over $720 million in real-world assets tokenized on-chain. All delivered with sub-second finality, block times under 100 milliseconds, and fees less than 1/10 of a cent, making Aptos more than 100 times cheaper than other leading blockchains. Built by the team behind the DM project at Meta, Aptos is what blockchain performance looks like when it's built for global financial markets. Discover why global institutions like BlackRock, Franklin Templeton, and NBC Universal are building on Aptos, and see for yourself at the Aptos Experience, October 15th to 16th in Brooklyn. Mantle leads the establishment of blockchain for banking as the next frontier. UR is the access layer that transforms Mantle Network into a purpose-built vertical platform, the blockchain for banking, that enables financial services on-chain. UR unifies and vertically aligns Mantle's focus on payments, trading, and assets. MI4, METH protocol, functions FBTC, supported by developer grants, ecosystem incentives, and the industry-leading distribution platform through the UR app, Reward Station, and Bybit launch pool. All economic activity within UR will be captured by Mantle Network to further drive value to token holders and establish its significance in blockchain for banking. Follow Mantle_official to learn more. Back to my conversation with Zach. So we're going to just clear the air for people, including myself, because I also was a bit mixed up on the relationship between the various entities and projects that are kind of interrelated here. So just explain in like very clear terms what the relationship is between Stripe, Tempo, Bridge. You could throw in Privy, like go ahead and just explain it all for everyone.
It's a great question. So Stripe, Bridge, Privy are, Bridge and Privy are part of Stripe. And you could really think about us as different layers of the stack. So Privy is like the account layer, very close to the blockchain. Pretty much everybody, actually everybody who builds on chain needs a wallet. They provide that wallet. Bridge is one layer of abstraction higher. Bridge is like the bank account. Bridge moves money across the fiat world and the blockchain world. We use wallets and we issue stable coins, but we're kind of act like the bank, if you think about it. And then Stripe is, ultimately the application. They're basically taking Bridge services and taking Privy services and delivering them to Stripe customers in ways that make sense for them. And the most obvious example is like pay with crypto via Stripe checkout, Stripe, which we launched with Shopify. And so that product sits on the entirety of the stack. And so developers can come to, us, and they can work directly with Privy if they just want wallets. They can work with Bridge and Privy if they want wallets and, money movement, or they could work with Stripe if they just want everything taken care of and abstracted away for them. Tempo is the lowest level of that stack. It is the actual payment rail. And Tempo is an independent company outside of Stripe, incubated by Stripe. And it is one payment rail that Bridge will use as folks want to build us, but they can also use Solana or Base or, any other blockchain. And the same thing applies for Privy. Privy will provide wallets, but they'll also provide wallets elsewhere.
Okay. So in terms of like how much you're working on Tempo, it's like there's another group working on Tempo and they might reach out to you for help or, to use Bridge in some way, but like you're not like, I don't know, giving your input necessarily on that.
Yeah, I mean, they're an independent company building a blockchain that will be a totally decentralized blockchain and payment rail. And we think that many Bridge developers will want that blockchain because it solves many problems that exist elsewhere. It will be a very good blockchain for, we do government aid programs where we send tens of thousands of different payments out all at the same time. It will be a very good blockchain to facilitate that type of activity. And so folks might choose to do it. But if they don't want to use it, they can use, Solana or Base if they wanted to.
And I want to ask this question, but I'm a little nervous that listeners might get touchy about the question. So if you're one of those people, I just have to ask this. But I'd just be curious. So, Tempo is going to be this like payments focused blockchain. What is it about the current options that is not ideal? Like what problems do you still come across with your type of work that need to be resolved that you think perhaps Tempo could be, because they're focused specifically on payments that chain could resolve?
Yeah, I mean, it's a good question. I'll give a couple of examples. So, and by the way, we work with all of these teams, and we think they're all great, and we support many developers who are building with them. But on Solana, for instance, when you need to create a wallet that accepts USDC, you have to, prime that wallet to be able to accept USDC, which costs, cents. Sometimes I think it's like 20 cents or something like that. And we had a very large developer who is coming to us. They have millions, millions and millions of customers, and they wanted to create Solana wallets for all of their customers. The upfront cost of creating all of those wallets was really, really high. And it made it, not feasible. And it's one small thing, but it makes it such that blockchain is really hard for very scaled applications to create, millions of wallets for their end customers. Another example that we've run into is just like TPS limitations. How many transactions can we push through these various blockchains? In many ways, we've made like tremendous progress over the last couple years, but the TPS requirements of Stripe alone are, an order of magnitude, if not more, larger than even the highest performing blockchain today. And so, while a lot of these blockchains are getting better at minimizing gas and getting better at moving lots of transactions, there's still this like, discontinuous path that we need to get to be able to handle payment scale applications, and if a bank or, if we're moving like serious money, trillions of dollars a day, many, many millions of transactions a day across blockchains, there needs to be something that is built specifically to solve those problems.
Okay. Yeah. I mean, I guess like one other thing is just when you talk about that, I'm thinking, well, if you do build a chain that can resolve those problems, then is it the case that you, like, would you want to restrict that to payment use cases? And if so, how would you do that? I'm just thinking about like, I don't know if you're following this little war happening in Bitcoin right now about the NFTs and like what Bitcoin's supposed to be for. And like some people want a hard fork and it's a whole thing. So I just, and like I'm seeing these arguments on Twitter where people are saying, how can you limit like how people are using this? Like so yeah, it's just another question that comes up when you describe like, how Tempo could resolve these types of things. Or maybe it doesn't matter. Maybe like if they do really have that many TPS, then yeah, you don't need to restrict it or.
Yeah, it is. It's going to be a blockchain that's decentralized, and so people can build whatever they want on it. So, all those folks who are growing dissatisfied on Bitcoin can come, I guess, to Tempo and build their NFT applications on Tempo. But that's not what we're focusing. That's not the problem we're focusing on. And like the Tempo team specifically is focused on like we've just really wanted a more reliable blockchain that solves a lot of these very little problems. Like another example is that gas can be paid, well, on Tempo will be able to be paid in any stablecoin. That's like really nice. So you don't need to acquire these different assets to be able to fund transactions, which is another really complexifying factor to moving lots of money across various blockchains.
Yeah, for sure. Okay, so I want to go back to, just like, because you kind of gave a sneak preview of how your life has changed or how the world at Bridge has changed since the acquisition. And I'm sure, just what we talked about, like with Genius, and I'm sure you're very well. Tempo is not the only stable chain that's launching. So I was just curious, like, based on the conversations you're having right now, because I'm sure you are in a lot of rooms where like what the future is going to look like and how crazy it's going to get or how cool it's going to get. So I just would love to hear, based on what you're hearing or what you're discussing with people, what do you think the future of crypto or payments would look like, in, I don't know, a year or two?
I mean, I guess the first thing I'll say is that I have been like constantly wrong about about what would happen over the course of a year. I did not foresee a year ago. We announced the Stripe acquisition in October, so like I did not foresee that we would be in this situation where there's such regulatory momentum that we're seeing basically every fintech do something with stablecoins, that there is like this increasingly consensus view that stablecoins can be helpful in some way, shape, or form if you run a global money business. And so, yeah, I didn't see that happening. That being said, if I had to like look into my very murky crystal ball, the payments world is like one of network effects. And so what I expect to happen is that progress will be steady and then dramatic. And a good example of this is like stablecoin settlement across the card networks. Visa and I think maybe just Visa at this point does stablecoin settlement. But right now, stablecoin settlement is less efficient than fiat settlement. And the reason is because the banks are paying in with fiat, and then Visa has to create the stablecoin and then pay out in stablecoin. So it's an extra step to pay out in stablecoin. But if the banks are starting to settle with stablecoins and then Visa is also paying out in stablecoins, then it's much more efficient. And so that like flywheel needs to like slowly be cranked. And then once it's spinning, you can get all sorts of amazing things like, imagine you're a merchant and someone pays you and the money is instantly available in your bank account versus T+2. Those sorts of things become possible where you actually have streaming of payments into your bank account and so on. But it necessitates slowly building, settlement to Visa, settlement from Visa, over time. And the amazing thing that's happening now as we shift down this adoption curve is we're starting to see banks lean in. We're starting to see the networks lean in. We're starting to see all the cross-border payments companies lean in. And so all these folks that are tying together our global money movement infrastructure are beginning to crank the flywheel. And what I think is going to happen is over the next, year to 3 years, is that we're going to start to see a very, stablecoins have historically been like trading, and then they were like cross-border. We're going to start to see like 10, 15, 20% of all global money movement shift to these tokenized rails. And this is going to be the core way in which money moves. And real success is when like stablecoins just become infrastructure. Coming back to our other conversation, it is that there just is no world where people go to the stablecoin store and pick between 700 different stablecoins. That all of this is going to happen with stablecoins converting between a Visa stablecoin and a bank stablecoin and a Coinbase stablecoin and a Phantom stablecoin. All of it happening under the hood as money moves between all these different parties. And so I'm like, we've long believed that tokenized money is just going to be core global money movement infrastructure. And we've started with some of the earliest use cases, and we're starting to shift to some of the much, more mature and much bigger and much more, critical money movement opportunities.
And out of curiosity, I'd love if you could just pick hypothetical people around the world to describe like how their lives would change. So it could be like any geography or like type of worker or, family relationship or whatever. But I'm sure there's a few different use cases that you think will be transformed.
Yeah, I mean, maybe just taking a step back before going into people. I have like, this is one of the things I love about fintech is, seeing it from like, I worked at Square pretty early on. and just enabling people to be able to accept money a little easier. Like a flower merchant being able to accept a card payment, whereas before it was really hard for them to be able to get a card reader and so on, just dramatically changed their lives. Um, and so very small improvements in the cost of doing business, very small improvements in the market. I mean, this is what Stripe did. Stripe by making it easier to accept credit cards online, dramatically changed the fortunes of, you know, people who are building businesses all over the world, because now all of a sudden they could serve the world. Whereas before they were only able to serve folks locally. So very small changes in the way money moves and in the cost of accepting money and the cost of sending money have these like profound ripple effects that sometimes are very hard to notice. Some of the things that we're really starting to see already are that, one of the big things is like people all over the world for the first time have actual economic choice. Like before, if you were, a host on Airbnb, or you were, data labeling on Scale AI, or you were doing work on Upwork, you could only get paid out in your local currency. Now you have economic choice. You could pick the currency that you want to hold. And a lot of people all over the world are picking right now to save in stablecoins. Another example is like cards, for instance, have never become widely popular across the African continent for a bunch of different reasons. And and because of the instability of local currency, the lack of card access and the instability of local currency, is huge swath of the African continent doesn't have access to core services that we just take for granted. Like you can't pay for AWS, or it's very challenging to pay for Google Ads, or how do you pay for OpenAI? If you wanted to use any of these services, it's very challenging now. Merchants will decline your payments because they can't get Naira out of the country, so it's very hard to accept those payments. But now, if you have a bunch of folks holding stable coins, and they could either pay directly with those stable coins, which they would love, or you could issue cards on top, and then the stable coins are settled directly to the end customers. Another big thing is like, imagine every consumer deposit is earning 3%.
Yeah.
That's a lot of economic surplus that is delivered back to consumers and businesses. Um, and maybe the last thing I'd say is like, I mentioned this before, but imagine every merchant right now, you're selling something online. It takes you 2 days to get your money, sometimes 5 days because of risk and whatever else. Imagine after every single swipe of a card, every single payment, the money lands in your bank account immediately. That saves like days of working capital for you. It enables you to operate your business more nimbly. So I think there are going to be this and those are the ones that just come to mind. And like I said, I've been horribly wrong at predicting the future. So there are probably more that are like way more profound that will occur over the next, 1 year or 5 years or 10 years.
Yeah. A long time ago, I think this might have been, I don't know, 8 years ago, or I truly don't know. Anyway, Roya Mabou, who is an Afghan entrepreneur, came on the show, and she talked about how she had this like blogging business where there were all these little bloggers on her site, and many of them were women. And in Afghanistan, they had a hard time paying the women because a lot of them didn't have bank accounts, or if they did, their male relatives would confiscate their earnings. So they set them up with Bitcoin wallets, and then they taught them how to do that. And obviously the male relatives didn't know how to confiscate the Bitcoin. And so that's how they were paying them. And I feel like that's like an example of, it's very similar to what you were talking about with the merchants who suddenly had a way to, sell to the world with Stripe. But that's like a more, just even more kind of, what's the word like, as someone who doesn't have access to outside, money. And
Totally.
yeah, that would be like another example of how stablecoins could change people's lives.
Yeah.
Um,
Yeah.
so
Totally.
yeah, you mentioned the credit cards that could be created out of people receiving stablecoin payments, and you have a product that you announced is in the spring, just like that, stablecoin backed credit cards, and that started in Latin America. And I was wondering, like, you know, again, why was that like one of the first things that you did? And like, I would love to hear kind of the strategy behind choosing that region.
I mean, one of the maybe coming back to this theme of being a bad prognosticator of the future. Like many of the things that we have created, it has come from demand from the developers who've been building on Bridge. And we've just seen a lot of developers who've been building payouts products. So, maybe you're helping a platform pay workers all over the world, or they're building neobanks. Maybe you're building Cleva is building with us. They're a neobank in Africa, or Dollar App, across LatAm. And all of them want other means to take stablecoins and be able to spend them in the world. And stablecoins are clearly this very important infrastructure on top of which you can build savings and savings products. But then in order to spend them, either you need stablecoins to be accepted, which is slowly starting to happen with, Stripe turning it on for all of its merchants and so on. But that's going to take a while to compound. Or two, you need stablecoins to be interoperable with the networks that exist today. And the biggest of those networks are Visa and MasterCard. The really cool thing that we're doing with them, though, is that stablecoins are really the first global financial building block. So, before stablecoins, if you were building a financial product, you build on U.S. banking stack to serve U.S., Mexican to serve Mexico, and so on. Stablecoins enable you to serve, hundreds of different countries all at the same time. And so our card issuance product also enables you to deliver a card into those markets. And so I think it's at like 57 or 58 different countries now. So you could build a stablecoin savings product and then launch a card into 58 markets all at the same time, which is like completely unheard of before stablecoins.
Wow. Yeah. I honestly was thinking because I have some people that that we pay in that region, and I was like, I wonder if they might be interested in this. I did also want to ask because so Bridge has its own stablecoin USDB. Talk about how you guys use that.
Yeah, I mean, it's the same way that we've been talking about with the Open Issuance platform. So USDB is built on top of the Open Issuance platform, and it's mostly meant as, an easy way for developers who want to come in and want access to the underlying economics of a stablecoin immediately to be able to access them. Because we know that in order to build like world-class financial products for their customers, you need access to the underlying economics. And so we built USDB as a means for folks to come in day one, hit our API, convert dollars or other stable coins or whatever else into USDB, earn the economics, and then you can convert back into USDT or USDC or dollars or whatever else when folks want to spend or save or what have you. Ultimately, we think this is kind of like a USDB for us is like a trial product because we believe everyone ultimately will want and benefit from their own stablecoin, and we make it so easy to do so that then you could just hit a different API, create your own stablecoin, customize your reserves, and then have much more control over the asset and what blockchains it's on and so on.
Oh, okay. And so just to understand, so basically, like if they come to Bridge and they want to use it right away when they start using the API, they could, if they're going to have stable coins, they could just get USDB kind of quickly and easily. But if they end up using the Open Issuance platform, then they kind of can create their own, but maybe in the meantime, it's like USDB.
Exactly.
Okay.
Exactly. And ultimately this is kind of because, most people today, there's a perceived it feels like a big deal to create your own stablecoin. And that's because like when people create a stablecoin, it's like news and like people write about it and like, folks are like, oh my gosh, you created a stablecoin. Ultimately, we think that is just going to go away. And everyone is going to just think like, oh, of course, when money is on my platform, it's going to be my money. And when money is on someone else's platform, it's going to be their money. And I would think of USDB as like a graduation path to get folks there because, it's readily available and right there out of the box.
Okay. And then I did also just want to ask a little bit more about like the connection between Bridge and Privy because, I understand like, Stripe has its own customers, you have your own customers, Privy has its own customers, but then you also said like customers could also use multiple parts. So are there like specific ways that you've been working together with Privy, or is it really just developers' choice if they want to work together with both of you, or how does that work?
Uh, Um, I would say that yes. Uh, so it is first and foremost, it's developers' choice. This is like we're just like we're totally and they share a very similar ethos, like totally in service of developers and the folks who are building on our APIs. Like we have not tried to force any one thing or direction, what have you, on folks. Like it is ultimately we believe that like all the folks who are building a stablecoin application will show us what is most useful, and then we will make it easier and easier and easier for them to scale whatever it is that they want to build. That being said, there are clear ways in which if someone wanted to come to us and use Bridge and Privy together, it's just easier. There's like, through the Bridge APIs, you could create Privy wallets. You have one set of APIs through which you can access multiple products. If you want to go down and operate closer to the blockchain, there's a seamless graduation path to do that, and to use Privy. And similarly, if you come in and you want wallets and you want to build with Privy, it becomes very easy to come and use Bridge with that. But if you don't want to use Bridge and you wanted to use another partner, you could, Privy is not going to force you to do that. I would think of all of these as like different doors, that folks can enter based on where they are, and what their preferences are. It's the whole stack works, better together, but we're not going to force the stack on anyone. The market is like way too early for any of that. Like we want people to have to build the best products for whatever their needs are.
Yeah, that makes sense. So I have to ask you, because you were part of the winning USDH proposal by Native Markets. Bridge was, and as I'm sure you're well aware, that was a huge deal in crypto. Like people, I don't know if the Hyperliquid team expected that, but anyway, so obviously the USDH coin just launched, and you guys are the issuer. You also offer its global compliance and global compliance profile and fiat rails. So just explain like what it is that you're doing for USDH and I know it's been a few days, but if there's anything notable to say about, what's been happening since launch.
Yeah, I mean, USDH is built on top of the Open Issuance platform, and I think this like just highlights how much easier Open Issuance makes the issuance process. When we sort of won the bid, and then we were ready and had deployed the token. I think we won the bid on Sunday morning, and we were ready and had deployed the token Sunday afternoon. It did not officially go live and with market makers and what have you for, just because the team wanted to ramp up and slowly do some stuff for like another 10 days or 7 days or something like that. But it was like ready pretty much immediately for the ecosystem.
That is
And
so
like
interesting.
that's like amazing. Like it is this was this process where like when PYUSD was launched, it was like years. And like Robinhood announced that they're rolling out a stablecoin and it still hasn't rolled out. And with USDH, we launched a stablecoin in hours. And so,
But
yeah.
okay, but I just need to understand the timeline because obviously they had proposed it before. So was there legwork ahead of that? You know, like, and hopefully this won't seem conspiracy theorist, but they even made the proposal like right after, the announcement was made that proposals were open. So it looked like they had actually been working on it before. So like when you give that little time frame, is there more legwork kind of before it that you're not counting or?
Well, we had certainly been talking to the team. I mean, the 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 native markets team, they had wanted to build a stablecoin on Hyperliquid for a while. And honestly, Paxos could have wanted to build a stablecoin on Hyperliquid a year ago if they wanted to. Or Agora or any of the other folks in the process. Ultimately, I think any of these processes, like if there is a stablecoin that's issued on the next blockchain, what's going to happen is some team native to that blockchain is going to be like, oh, I think we should have our own stablecoin. They're going to put forth a proposal to the community. And then just like what happened here, a bunch of people are going to pile on behind to try to compete. So somebody has to be first to kick the process off. I think that they believe, I don't want to speak for them. I would just say like I had zero idea that this was going to turn into the mud fight that it ended up becoming. um, but we really talked to the team before, and spent time with them and so on. But honestly, we didn't know. Halfway through the project, we had no idea what was going to happen.
Yeah.
You
But
know?
I don't know if so my question was really more like when you say that it just took, a few hours to basically launch it. Um, like is that like for any company that comes to you and they want to launch their own stablecoin, is that the timeline that they should expect or is there like a longer time frame?
If there is no customization to the smart contract, yes. If there is customization to the smart contract, then it needs to be audited, and then that takes time. But you could come to us and you could literally be hitting our API and say, "Hey, I'm taking USD. I'm getting a bunch of dollars. I want to settle as USDC," and then you could just change an API parameter, and then all of a sudden you're settling in your own stablecoin. And that's really it. We just think that this is going to become a core part of stablecoin money movement, that people are just going to want the money to be their own. It is another quick example of this is like imagine you have like Bank of America and JP Morgan that are both using stablecoins. Bank of America and JP Morgan aren't going to use USDC. Like they're not going to uh, have deposits that are held at another financial institution, which is Circle, and they're not going to use each other's stablecoins. So, like Bank of America sends Bank of America coin to JP Morgan. JP Morgan's not going to hold Bank of America coin because then JP Morgan's deposits are held at Bank of America, and vice versa. They're going to want to send the stablecoin, and at the end of the day, net settle money so that all deposits are with the appropriate institution.
Oh, wait,
Um,
this is so
yeah.
interesting because now then I am remembering that deposit token thing,
Yeah.
which is like a slightly different version of the same concept or like a different way to solve a similar problem.
Yeah, yeah, and I think deposit tokens are the same thing. Like whether it's a stable coin or a deposit token, ultimately the only difference between the two is whether the stable coin is backed by cash and like mortgages and other things, or cash and treasuries. Um, but ultimately they're representations of a dollar,
Yeah.
and so I view these as like very very similar.
Okay.
Yeah.
So I wanted to ask about a couple of other recent, bits of news that you guys announced. So the bigger one, I think, you tell me, is the Shopify base agreement, which Bridge was a part of. I also saw you partnered with M0 on the MetaMask MUSD coin. So maybe just kind of wrap it up and talk about like those two deals and like why you think they're important or how they came together or just whatever you think is important to mention about those.
The two are very different. And we think of a lot of what we're doing is, we're just like helping to push the stablecoin space forward and doing so with all the developers who want to build using stablecoins. And so Shopify wants to move into more countries. They want people in a bunch of different countries where they can't settle fiat to be able to accept and sell goods because it's really hard for Shopify to spin up bank partners and custody and pay out fiat in XYZ country doesn't mean that person should be shut off from the global economy. And so we view this as like a very big opportunity for Shopify, a very big opportunity for sellers in emerging markets, and just a very important bit of like, turning the stablecoin flywheel where stablecoins become accepted across Shopify merchants, they become accepted across Stripe merchants. Then hopefully more people are paying directly with stablecoins and so on. So very excited about this. We think this is like, the more and more acquirers. We also work with Shift4 so that stablecoins can be accepted through all the folks who use Shift4 as a payment processor. So we're very optimistic about what this will mean as like more and more folks come online to accept stablecoin payments. And then on the M0 side, they are a different partner. They're helping us issue stablecoins. And we think, stablecoin issuance solves this like other very big problem in the stablecoin space. And M0 has like a very unique approach and an amazing team to building a decentralized issuance service. And some folks who are going to want to issue stablecoins will want the infrastructure that they provide, but the backing of Bridge and the money management of Bridge. And so that's how we partnered with MetaMask to launch MUSD. And like, it's been a couple weeks now and it's like very successful and growing and we're super excited about it.
Okay. And just to understand, so basically when you work with M0, then it's almost like it becomes like a white label product. Is that how to think about that?
It's still Bridge is managing the funds under the hood, and instead of hitting the using Bridge as like the issuer and the creator of the smart contract, M0 is the issuer and the creator of the smart contract, and M0 has also built very similar to our interoperability network. M0 has built a bunch of stuff to make the stablecoins that they issue interoperable. And over time, I think you'll be able to move between an M0 network and a Bridge network, and you kind of just get to pick whether you're issuing with them or us, and we're kind of indifferent.
Interesting. Wait, so in a way,
Yeah.
you guys are competitors, but you
No. I would, we offer very similar services, but people are going to tend to choose them. The audience that will choose and want M0 is different than the audience that will choose and want Bridge, or at least has been historically. And so, I would think about it like different segments of the market. Like MetaMask from the very beginning wanted to work with a regulated, issuer under the hood, but wanted to work with M0 to do the smart contracts and some of the interoperability. And that was their choice, and we are happy to support it. Because ultimately, what's success for us is that, there are more stablecoins and folks fully control the assets that they issue so that the stablecoin space can be as big as it can be.
Okay. So last question. While you've been talking, hopefully I don't have too many people who work at banks who listen to this show, because honestly, while you were talking, I just kind of kept thinking like, the downfall of banks is going to be pretty fast. Like maybe what I just said is a little bit of hyperbole. Maybe downfall is like a strong word, but I just was like, they're going to be disrupted so quickly. I don't know. Maybe I'm wrong. I could be wrong. But point is, the reason that I'm mentioning this is that, as I'm sure you're well aware, we have another technological revolution happening at the same time. We have these AIs, and I was just wondering, like from these conversations you're having, because I'm sure you're having a lot, when you look at these two trends, like where do you think that could go? Like, what does that future look like to you?
I would say I think that stablecoins and AI make, an enormous amount of sense together. I think that I was talking to someone and they were telling me that like with each new technology, there tends to be a new money movement paradigm that supports that technology. Like the internet was like really accelerated and enabled by cards, or vice versa. Cards were really accelerated and enabled by the internet. I think that stablecoins represent something very similar in this world of AI because stablecoins can be held by non-humans. You can't really, non-humans can't hold fiat because you need to sort of be KYC'd and open a bank account and so on. Payments can be streamed, money can be programmed. It is just a better financial instrument, I think, for this world. But I also think that it's going to take us some time to figure out the right context through which, and the right use cases that where we begin to scale adoption. I'm like really excited about what Cloudflare is doing, with their paper crawl, and like they're issuing a stable coin that will be used, hopefully by these agents as they crawl various websites, and hopefully that use case scales. But we're in this phase right now of experimentation where people like you and me squint and like kind of see the opportunity, but we need a bunch of entrepreneurs to figure out how to turn the promise into reality.
Huh. Okay, well, it's been so fun chatting with you. Thank you so much for doing this, and congrats on your new product launch.
Amazing. Thank you for having me on.
Unchained is produced by Laura Shin with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and Pam Majumdar. Thanks for listening.